What's going on, guys? I hope you are doing well this afternoon. Just gonna cover Bitcoin and Ethereum here. Just been looking at the charts recently, and I've seen some interesting developments, not going to lie. Alright, just gonna stick to the 4 hour today due to just the overall trend and such like that. I've been noticing a couple of interesting things. We did end up getting a bullish divergence here on the 4 hour, which kind of developed yesterday. I think I said a bearish divergence by mistake, but I did mean bullish divergence. I'm going to zoom in more into the market cipher indicator here. The money flow itself is actually starting to bull out, which is rather interesting. And we did get a buy signal last night, which is rather intriguing. Now, price is yet to tag significant resistance here at this particular previous support zone, which is now most likely resistance at 20.8K. I will say this, if we do in fact get a 9 exponential moving average cross of the 21 exponential moving average, that will kind of change my tune in regards to this bearish instance. Now, we could still pump to the upside and tag the 20.8K mark, which would be 3.3% away from current price action. But if we see a 4 hour candle close above, say, 20.9, I would feel a little bit more confident that we're actually going to head maybe even all the way up to 21.7. Now, it's kind of a stretch to say at this time, but I want to show you something regarding the TSI here. So the TSI is actually printing a divergence as well, which is, low, higher low. Then we have a low, then a lower low. So that is pretty staunch bullish divergence, and the market cipher indicator is also presenting that as well, which is pretty interesting from a confluence perspective. Overall, trend is still to the downside. It's lower highs, lower lows at this time. Maybe in regards to this trend, there could be this I could take in consideration as well. Oh, okay, interesting. So we're kind of near an inflection point from a resistance standpoint. We already kind of got a 4 hour candle close, somewhat of a rejection off of it or near it at the very least. Let me see. I think actually I'm a little too close. Let me get that precise here. There you go. All right, that's pretty clear, pretty clean cut. Or is it? There you go. Yeah, that looks about right. Okay, we do have that. Now, as far as the bottom aspect of it, maybe this? Are we looking at a falling wedge here? Interesting. Now I'm kind of just thinking aloud right now due to the just overall pattern. Is there any confluence with this? It's kind of a stretch. Well, let me go all the way back here. Oh, wow. Okay. Oh, okay. All right, so yeah, wow. All right. So, I just realized we could have a potential falling wedge on our hands. That's actually very bullish. Now from the point here, okay, so I don't know if the top side is here or the top side is here. I'm gonna have to stick with just the top side here from the flag itself. So if this were to actually break to the upside, we could see something like a consolidation, maybe one more rejection, then a breakout, then to test the 20.8 zone, maybe even beyond. Okay. Well, that's rather interesting. But yes, we are seeing some type of winding up of the price. Now, I am still leaning bearish. I'll be completely honest with you. Just due to how the exponential moving averages are. But I mean, this is a pretty played out move, I have to admit. A 21% move to the downside is pretty hefty. Now, it is common for some patterns to underperform in certain instances. So my previous mark at 17.5 might have been a little too bearish. I want to do something here. I don't think I've done a Fibonacci extension in a while. Alright, let me see what the fib is saying here. Okay, so it was pretty close to the 0.236. Okay, not necessarily a tag by no means, but pretty much a close one. Alrighty. Okay, so from a 4-hour perspective, if we do in fact get a 4-hour candle close outside of this, I would have to at least expect price to come back up here at 21.7. Wow, really interesting pivot. Really interesting pivot. Yeah, this is tough. This is a tough one because there's kind of like a bipolar nature in all this. But you know, okay, I gotta put my bias aside. Money flow is pointing to the upside. The momentum wave is cutting closer to the zero line. So essentially, when these momentum waves are above the zero line, it just means that it's easier for bulls to push the price up as opposed to the bears to push the price down. Now, accompanied with the 4-hour divergence, that's pretty powerful. So for perspective, this was the last one right here at the point of a print. Let me take off the Fibonacci candles. They're kind of hard to read sometimes, especially you don't get candle closes and all that kind of stuff unless you calibrate it that way, which I really don't sometimes. Okay, but at candle close, which is down here, all the way up to wick high, we're looking at 19%, basically almost 20% here. Now, I'm not saying that the next pump will go 19%, but there are instances where these divergences do play out pretty positively. Given that we still are above key moving averages, it's hard for me to like expect a huge relief rally to kind of like actually break above the 100 EMA, because frankly, the 100 exponential moving average has yet to even be tested. Let alone the 50. Well, the 50 got tagged once right here. So, yeah, but it's pretty common to see multiple tags before a true reversal is set. We could just be in a relief rally with a bearish trend. That's something that I would definitely feel more confident in saying. So, just yeah, I would say precision's sake, I'm actually going to, I'm gonna go with doing this line chart right here, and that should be good. Yeah, let me take off this extension line. Let me take off this yellow line and point right there. Okay, so yeah, that kind of just gives a better context of what we're seeing. So we did see that breakout of a bear flag all the way down. Now we are potentially in a wedge. Huh. Maybe I could do something like this instead, where you get like an actual bottom. Yeah, we kind of had like, okay, interesting. It went lower than the initial, but it's funny because we also did see some manipulation. So we could ultimately be in some form of falling wedge, which would be bullish, frankly. Now, given how intense this move would be, yeah, we could potentially see prices back up to 24.8. That's interesting. Okay, yeah, I feel pretty confident saying that we are in some form of a falling wedge. That's an interesting revelation. I haven't been looking at the charts much as of late. I did this morning, but not in a couple hours here. All right, so let me go to Ethereum. Maybe Ethereum is giving us some instances here of truth. Okay. Okay, on the 4-hour we have something like this. Let me take this out of the way because this is the bear flag extension. You know what? I'm going to zoom into the 1 hour here because I do see something that's pretty obvious, which is a broadening descending wedge. Broadening descending wedges are actually bullish in nature, and it already broke out, but like I just need to address it in order to kind of get better context of what's currently happening in terms of price action. And there you go. That's decent. Yeah, that's pretty decent right there. And but ultimately did break out. But yeah, so this is a broadening descending wedge. How these work is you get the bottom of the wedge, and you get the top of the wedge right there. You go to the point of breakout, which is right here, and it aligns. Okay, so technically we might have a 1.5% more to go with this particular move. I would consider this as support, so theoretically speaking, we could extend this line out and kind of just constitute it as support given that it was breaking out. Notice on the 1 hour we didn't necessarily back test it as such. On the 1 hour we did get a 9 exponential moving average cross with the 21. Now we are getting a 21 and 50 EMA cross. This is actually pretty bullish, not gonna lie. How these work is if you get a cross and the price eventually comes back to back test the 21. So essentially what I'm looking for within the coming hours is price to eventually come back and back test the 21 exponential moving average. If it succeeds, if we have hourly candle closes above it and no hourly candle closes below the 21 EMA, that would be a confirmed bounce. From there, I would expect for prices to even follow on the 4 hour. Notice on the 4 hour we got a 9 cross and we broke above the 21 exponential moving averages. Now the 50 is still resistance. So the 9 exponential moving average likes to act as somewhat of the average placeholder. So wherever the 9 is, I like to keep my eye on because essentially we are oversold by 2.6% roughly. That's how I like to see it. Usually price, not the 9 exponential moving average is like a magnet. So price likes to come back to the 9, whether if it's in a bullish instance or a bearish instance. So in this case, I mean, you know, it can go hours and hours and hours without ever touching it, kind of like when you have a defined trend here. Didn't touch it for 4, 8, 12, 16, 24, like an entire day and a half basically. So this could drag out, but just something in terms of context, and you also want to see where the direction is going. We do have, you know, a general point to the upside on the 9 exponential moving average, so that's something to take in consideration as well. Yeah, as long as price is above the 9 exponential moving average on the 4 hour, you know, that's pretty bullish. Now, I did say yesterday that this is the line in the sand right here at 1,557. So if you see hourly candle, I'm sorry, if you see like a 4 hour candle close above this area, that just means we recovered that as support. So that would be a huge revelation in terms of price action. In regards to the Bitcoin chart, I don't think I ever talked about that. Oh yeah, I did. Yeah, 20.8 essentially is the same thing. So if you see like 4 hour candle closes, if you see 4 hour candle closes above 20.8, then yeah, like, you know, it's just safer to be more so bullish as opposed to bearish. And actually we are also we did get a broadening descending wedge as well on Bitcoin too. So let me draw that out for you. Yeah, we did get right here. Yeah, and also we got, hold on, hold the phone. Okay, I'll just drag it out right here. turn off the extension. There we go. Okay, so that's fine. Alright, so yeah, we did get that broadening descending wedge here, which is bullish. Candle pattern breakout point would be, well, there you go. Way higher than it is now. Alright, so yeah, we're kind of in that we're in that inflection point where the bulls have an opportunity of flipping the 9 exponential moving average as support. As you can see, the exponential moving averages on the 1 hour are turning bullish. So we are getting some semblances of support building, which is rather interesting. We do have a measured move all the way up to 20.7. Okay. Now I'm very curious to see if in fact price is able to break above 20.8. I mean, in terms of like scalp longing, you could probably, it'd probably be safer to have, gotten the breakout of this broadening descending wedge here, or close to it. But yeah, there is this underlying resistance line here that is keeping me queasy in doing any particular longing instances because it's more so a 4-hour resistance line. The higher the time frame, the more powerful it is. So the stronger it is. So if it's like a bearish resistance on the 4-hour, beats out a bullish support on the 1-hour, if that makes any sense. So we are seeing some semblances of a rally. I don't think it's over by any means. I do not think this rally is over, but also from my perspective, there's more room to the downside than there is to the upside. We are very close to resistance lines. As you can see, price has gotten rejected off of the 21 exponential moving average, this closest red line here. We also are super close to the 4-hour resistance from the top from previous points right here, from the local top here and the local top here, and we've had previous back tests from 1. We got this wick top here, so it's 1, 2, 3, and 4 and 5. Basically 5 times of getting tagged. Now, the more it gets tagged, the weaker it gets. Have to take that in consideration. But you also have to take in consideration that the closer you get to it, the more volatile price swings get. So if you're on the wrong side, it's not a conducive to wise trading. Best case scenario, if the trend does insist on continuing forward, I would love to see a 4-hour candle close above this red line. If I see a 4-hour candle close above this red line here, like if, for example, like if basically if Bitcoin can maintain support at 20,000, I could safely say that yes, we're gonna definitely come up here and test 20,840. But like I said just yesterday, and it kind of equates with the Ethereum's the similar instance. Losing this line of support was huge, so it's not going to be easy. There's going to be a lot of volatility. There's going to be sell-offs and stuff like that. So I'd much rather see the bulls play out their move and actually regain, the levels at basically 1,500 and 20,000 on Bitcoin respectively, to then initiate more so of a better long position at, say, maybe if 1550 gets retaken from the bulls, I would honestly expect price to come back up to 1800, really 1870. Yeah, definitely. Yeah, because this was actually a key zone. Yeah, actually going back here as well. All right, well, anyway, I'm kind of babbling around now. I just want to say thank you so much for taking the time to watch this video. Yeah, if you haven't already, please like the video. On YouTube, that is virtual currency, so the more likes I get, the better I feel. But yeah, so just want to say thanks once again. Have a great rest of the day. Bye-bye.